All right, so Chandler, there's been a lot of talk recently about a recession. Is a recession coming? What's going on in the markets from that perspective? And at the end of the day, we don't know, right? But if I'm a business owner right now and I'm considering selling my business, or maybe even I've already got my business listed, if a recession does come into play, what can I expect?
Sure. Great question. And what I would tell them is that essentially the process is the same, right? Nothing drastic changes. I would say there's a few key things I would say that if a recession happens or a market starts to turn down for an extended period of time, you're going to see a price adjustment across all industries. So what might be selling for 2 million, 5 million, 10 million today is going to be reduced at some level, right? And that's going to vary based off your industry, um, size of your company, and all that. But understand that maybe where it was a seller's market, you might see more of a buyer's market in a recession. Meaning, so that top price, it probably you're not going to be able to achieve it at the same level. But it doesn't mean that a $10 million business is now worth 5 million. I don't mean it that way. I just mean at some level you'll see some percentage of a price adjustment. You're going to see where in a tighter economy, third-party lenders are going to look at every deal with a microscope, more than normal, right? So they're going to make sure that cash flow is there. They're going to make sure that the potential buyer has the capacity, or they're just going to look at it with a little bit more fine-tuned comb. And what that means for the process is it's the same. It could potentially take a little bit longer. Maybe there's 2 or 3 more weeks of underwriting that might happen. That is currently happening, and you're going to see different banks have different appetites for different deals. And what I mean by that is where if we're in a recession, maybe you've got a bank that no longer wants to do hospitality. Maybe they don't want to look at doing hotels. Maybe you've got a bank that wouldn't particularly like a deal with a gas station. So you're going to have to pair your lenders better with each transaction. So that business needs to be brought to a lender that has no problem. I think of this most of the time with a business that doesn't have any real estate. So
Hmm.
by and large, most of the time in a business deal, it's just the business. There isn't a piece of property that goes with it. Well, the plus side is when you have a piece of property, that's built-in collateral, right? That's security for the bank for the loan. When you've got a business that might be making $1 million, but doesn't have a bunch of hard assets, that's harder to lend on. So in a recession, you may see banks get more particular about terms. And what that means is buyers are going to have to put down a little bit more money potentially, or you're going to have to be highly qualified. So on the sell side, not much changes. The process may take a little bit longer. There may be some more due diligence that needs to be done both on the buy side and on the lending. And obviously, you're going to see a price adjustment.
Okay, makes sense. Now, with that in mind, obviously it's August right now, and you know, we'll see kind of what ends up happening once quarter four comes around. But in the sense that right now is a little bit volatile, whether or not it's going to be a recession, should I list my business now? Is now the right time, or should I hold out?
I would say yes. I would, right. To me, the economy is still strong right now. There's going to be some variance. Obviously, we've said this a time or two on past episodes with an election cycle, with just a bunch of unknown things. We have no idea to tell whether or not a true recession is going to happen or not. Right now, the economy is in a good place. There are several industries that are still very hot that people are paying a premium for that has not gone away. I still think today you can get the best value for your business. Um,
What
I
are those
try not to,
industries?
yeah, I try not to look past 6 months. So I would say if you're debating on listing right now versus 6 months, I would say go ahead and list right now. Obviously, the industries I'm talking about that are still hot are across the board home services, subscription based, right? So that monthly income, anything like that. Um, just overall, the market is it's still good. There are deals happening, but they're going to slow down, and eventually, what's going to happen is the cream of the crop is going to rise, right? So the best businesses are going to get sold first. So
Hmm.
what I mean by that is, if you are operating a business right now looking to sell, make sure your house is in order. Right. Make sure that you're fully staffed where you can be. Make sure that you've got your financials in place because the unicorns or the shiny apples, they're going to sell first in a market where people are more when people start looking at it on a deeper dive on it, kind of under a microscope, they're going to pick the ones that shine first, right? So I'm still confident that if you've got a business and it cash flows, it's going to sell. It may take you a little bit longer, and ultimately you want to put your best foot forward. So making sure your financials are in order, making sure that you've got staffing in place, and everything that goes around with running a successful business. If you're doing that, your business is still going to sell. If you are kind of falling behind on one of those categories, then it may take you longer to sell your business if the market does turn.
Yeah, and to be fair, that's kind of the rule across the board. It's things that, we often talk about beating a dead horse. Having your books in order, having your house in order generally, that's what we recommend generally. But obviously in a more dire economic situation, to your point, it's the cream of the crop that's going to sell first.
I think the biggest focus in a down economy is that if you're not a cash buyer and you're having to use lending to get it, that's what's going to be the difference maker. If you're wanting to run it absentee, there needs to be enough cash flow that you don't have to hop in as the operator. That debt service is going to be a lot more important moving forward in a down economy than in where we are now. So to me, that's the biggest thing. If you are looking, on the flip side, you can get a good deal. If you can come in with cash, then you're probably potentially going to be able to have a better deal moving forward in the next 6 months to a year than right now. But if you're using lending to buy a business, just understand that you're going to have outside capital, enough to put down for a down payment, and your capacity to handle the loan is going to be important. And your experience, not to go down a rabbit hole, but if you are looking at, let's just insert, if you're looking to, you've always wanted to own a jewelry store, so you're going to buy a jewelry store. If you don't have prior jewelry store experience, moving forward in a down economy, that's going to, I say, hurt you in the sense that banks are going to require you to have a larger down payment or to put more down than right now or even 6 months ago. So that's the big thing, is if you don't have experience in the industry you're looking to get into, that potentially could cause you to pay more on the lending side. And that's going to be something you see more commonly in a down market.
So sort of just in summary, in the event that there is a recession, a down economy, what we would really be looking at is broadly a buyer's market where prices are going to be down a little bit based on what lenders are really willing to put out, which even though it's a buyer's market, the buyer is also going to be held to a higher standard by lenders. So both sides are penalized in a sense in a down economy.
Yeah, you're going to see where the sell side, if you've got a business that you're putting on the market, you need to make sure what you've said your financials are exactly that, right? If you're saying you're taking home $500,000, if that's actually 425,000, the bank is going to care about that a lot more than they did 6 months ago. That 425 is not $500,000. Even though that's only $75,000 off, if the market were to turn, that's going to matter a lot more. You're going to get a lot less grace from a lender than you would currently right now. But on the flip side, buyers are going to need to be highly qualified to be able to purchase the business. So if you're a seller, you should feel secure in the fact that if we get to that point and you're getting offers and they've got a pre-approval letter, that they've secured that financing. So yes, it works on both sides, but overall, that it will be fair pricing on both sides. You're going to
Sure.
see buyers, pay a little bit less, but they probably should be. So no more, if a typical industry were to sell on a 3.5 multiple, and currently they were getting 3.5 to 4, you're just going to see a kind of an adjustment. That doesn't mean all of a sudden the buyer is just getting some crazy deal. It's just kind of brought back to the middle. More
Sure.
neutral
Sure.
pricing is what I would say.
That makes sense. Well, hopefully we will not be in a recession. Hopefully the economy will be strong and maybe even stronger after the elections. We'll see. But thanks, man. Thanks for talking us through that. And if you're a buyer, it sounds like now's the time to look at some good deals, because if things do kind of downturn, it might affect your financing options. So now's the time. All right, sweet deal. Thank you.